I'm working on a video on cap rates. I'm trying to understand this better because when you look at commercial real estate, especially when investing in REITs, cap rate is a really important metric to consider. I know the basic idea is pretty straightforward. The formula for cap rate is NOI, net operating income, over market value, the value of the property. And so obviously you want to compare it to similar properties, and you want to not only take the cap rate if you were to invest in a property, but look at other metrics as well. So there's a difference between understanding something and mastering it. Like, we all understand how to do certain things. Like, we all understand how to play basketball, for instance. But to master it takes a long time. Same thing with learning about the stock market. Understanding what a stock is, understanding what a balance sheet is a lot different than mastering it. So net operating income, which is the income you receive from that piece of real estate minus the expenses you pay. So the income is pretty straightforward. That's a rent the tenants pay you. The expenses would include maintenance, upkeep of the property, insurance, and taxes. So the net income, rent minus expenses, that's a numerator of the equation. The bottom is the value of the property. It's generally between 5 and 10% is the cap rate usually falls in that range. But if you, I'll show you one of the slides. What affects the cap rate? Okay, so say you're going to invest $1 million, and you have two options. The first option is you buy treasury bonds, U.S. government treasury bonds at a 3% annual interest rate. So it's pretty much a guaranteed return. Or you can buy a building for $1 million. So how do you value a building? How do you look at it in relation to T-bonds? Well, you get the cap rate. So what would be the cap rate? Well, you need to figure out the net operating income, how much rent you receive, and if the person who's selling you the building says, "Oh, last year I received $90,000 in rent," you could pretend there's 10 tenants in the building. 9 tenants are using it. 1 space is open. Nobody's leasing it out. So those 9 tenants throughout the year paid you $10,000 each. So it's $90,000 of rental income you received. But you have to minus out your expenses. So expenses are taxes, insurance, maintenance, to maintain the building. So that if that's $20,000, the cap rate would be 7% in this example. $70,000 is your NOI, net operating income, over if the person selling you the building wants to sell it to you for $1 million, over $1 million. So you have a 7% NOI. So that's how you compare it to T-bonds. And 7% is higher than 3%. So you may go with this second choice. Why do you receive an extra 4%? Because it's a risk you're taking for investing in this property. If the NOI was lower, you might not do it. This is a really basic kind of like textbook example. But let me know in the comments. I was thinking we can do the dividend model. I put together this model, and you can email me. I'll send this to you. It's just a quick way to look at a stock that pays dividend to identify, is it a good buy? Is it not? And I'll show you. I know it's kind of boring talking about cap rates, things like that, but in order to understand something really well, you kind of have to. Sometimes it is boring. Like you just have to keep like drilling it home. Kind of like shooting free throws. If you want to be really good at shooting free throws, you could do that an hour a day, every day. I mean, it's kind of boring, but you'll get better if you shoot 100 free throws every day, as opposed to not shooting any at all. But yeah, throw out some. So I just did a filter or a search on my to see the top dividend paying stocks. So everything above 10% is in this file. All U.S. stocks that pay above 10%. So anytime a stock pays more than 10%, you have to question: can they continue paying that high of a dividend? Sometimes they could. Other times it's just kind of like a one-time thing. Like, the reason it's so high is because the stock price came down so much, so the yield appears really high. That's why I created this. So let's just take one. Let's do TELUS. That's the Canadian telecommunications company. That's a pretty, it's a big company, 22 billion market cap, which is the second biggest on this list. So anytime you invest in a microcap company, expect volatility. It's a lot more risk. So TELUS. So let's just TU. Let's get the stock price. And throw out some tickers because it helps me gives me more ideas on things. So it's trading at $15. Let's see, what was it trading at a year ago? 1637, so it's down a little bit. The market cap is 22.7 billion. So this number's in millions, 22.7 billion. What's the free cash flow? $1.4. Okay, this isn't Canadian dollars, so let's use the ticker that trades in Canada, so we don't have to do any conversions. Okay, so 20.72. So this is a ticker that trades on the TSX. I mean, it should be the same. Obviously, the numbers are slightly different, but percentages will be the same. 31.4 billion. What's the... So free cash flow is 1,460. 1.46 billion. That's a free cash flow in the trailing 12 months. The net income is 993 million. Everything's in Canadian dollars. Let's see the buyback. They don't buy back shares, so 0. So how many consecutive years have they been paying a dividend? So this is simply Wall Street. This shows us the past 10 years. So they've been pretty consistent the past 10 years. I'm sure they've been paying it probably for like 30, 40 consecutive years. And what's the last dividend payment? 40 cents. So the last two were 40 cents. So we'll just use 7.8%. So that's what I get too. I get 7.8%. But if you bought this stock a year ago, you would have lost 7.4% on the stock price, because it's down that much from last year. So if you include the dividend, you're pretty much flat on this investment. But you don't lose it until you sell. So you're fine if you're still holding on. So if you put $10,000 into this company a year ago, you'd have pretty much $10,000. You could maybe go out for lunch. you made $34. But this is how much money it cost the company in dividends. This is how much they pay across an entire year, $2.4 billion. And this is a big red flag. They can't even cover it once with their free cash flow. They can only cover it 60% of their dividend with their free cash flow, because their free cash flow is 1.5 billion, and it cost them 2.4 billion to pay dividends. Same thing with net income. They can't cover the dividend with their net income, only 40%. So actually, the dividend they can afford is 4.6%. Just based on their free cash flow. So if they paid out 100% of their free cash flow, the yield would be 4.6%. So you can see they don't decrease their dividend ever. It just goes up. And you see the yield is around 4%, which is a normal yield for a company. It's between 3 and 5% since 2015. But the past 2 years, it shot way up. And it's not like they're paying such a big dividend. It's just because the stock price came way down and the yield went up. So it's close to 9%. That's a forecast, 9%. But throw out a comment, especially if you're in Canada, because I want to get some more info on this stock. So I mean, they're paying a 7.8% dividend. How can the dividend come down to 4.6%? Well, there's pretty much two ways, right? They cut their dividend, which I don't think they're going to do, because they haven't cut their dividend. Let me see. Historical. Let's go Yahoo Finance, because I want to see how far back the dividend goes. You can hear me, right? Hope you can hear me. Historical data. Dividend. What? Okay, let's go back to 96. That's how far back it goes. Okay. So here's a dividend since 96. I'm going to try to put it into a graph. They did cut their dividend in 2001. I'm sure 2001 was a tough year. The .com crash. Lots of companies started losing money. So right here, let's bring down another decimal. So they were paying, up through 2001, they were paying almost 9 cents a share. Their dividend was 9 cents. So and they pay a quarterly dividend, so 9 cents. But I guess the stock went down, or they started losing money, possibly less free cash flow, and they brought their dividend down to 38 cents. That's the only dividend cut it looks like in the past 30 years. So I don't think there's much risk of them slashing their dividend. That's what I'm trying to say. They pretty much raise it every year. You can see this is back in 96. There's a dip here, and it's been only going up since then. So I think it's more likely the stock will go up in price to bring the dividend down. Let's see what the stock has been trading. It must be down a lot. I mean, what seems like most stocks are down a lot. So it peaked in 2022 at $33. Yeah, so it pretty much only ran up until 2022. 34 was a peak. Now it's down to 21. So if it gets back to the low 30s level, you see the 7.8 right here. This number will change when I put 34 in. I'm going to put 34 in. So if it gets back up to 34, it's a 4.7% yield, which I think is appropriate for a stock like this, 4.7%. Because no stock trades at a 9% yield for like more than like maybe a year max. Because if a stock traded at a 9% yield for like 5-6 years, everybody would be buying that stock. So that looks like a good opportunity. TELUS. According to this website, 10.7%. But you see they can't even cover half of that. The dividend coverage is only 0.4. I'm at 0.7. I wonder why it's different. It's hard to tell. It could be timing. So what's another good one? Yeah, let me know in the comments. So you generally want at least a coverage, dividend coverage. How many times they can cover their dividend? Because if it's below 1, the dividend probably will get cut unless they start making more money. What's it? This one looks pretty interesting. Keenon Holdings. A little on the smaller side, 1.6 billion, but they cover 3 times with their free cash flow. So Ken. Is anybody familiar with this stock? I don't think I've ever heard of this company before. It is an Israeli company. I just want to make sure they report in US dollars. So it looks like they report in US dollars. Okay. $31, 1.6 billion. What were they trading at a year ago? 23. So it's up a lot. That's a little surprising. So could you just buy a bunch before the record date? No, but there's no real way to play arbitrage, because when a company pays a dividend, the stock price goes down the same as that dividend. So if a company paid a 1% dividend, the stock will go down 1%. I mean, it's possible the stock goes up after paying a dividend based off of market sentiment. So to give you an example, if you put $10,000 into a stock, right? And let's just say they paid an 8% dividend, which means that's 2% per quarter. So if you bought the stock, you would get that 2% dividend because you're getting one dividend payment. So you get $200. But it would go down in price. The stock will go down $200. So you'd still be at the same place as before. Of course, the market isn't. The other things happen, so it could go down more than 2%. It could go down 10%. It could go up 10%. But the price of the stock will go down equivalent to how much dividend they pay out. So there's no way to, like, unless you get lucky and it does go up, but there's definitely no guarantee that's going to happen. Pfizer beat or crush earnings with profits of 92 cents. Raised outlook should be a V-shaped recovery. I'm thinking that too. I'm like, why don't I just put all my money into Pfizer? It seems like a no-brainer. Like it, because things gravitate towards the mean, right? And when a stock comes down a lot, it's more likely to go up than continue going down. And same thing with stock keeps going up a lot, it's going to regress. It might only regress quick, like in a matter of a week or two, it may come down 10%, but then it goes to new highs. If you're a day trader, that's what they do. They try to like find these, but I don't think people really make money that way. The only people that make money are lying. So they have negative free cash flow. So that's going to be hard. I'll just put 0 here. Net income. They do a positive net income. They do buy back 0.7%. That's good. Let's see how many consecutive years. April. Okay, they do pay annual dividends, so it looks like they're pretty consistent with the annual dividends. And the last dividend they paid was $4.80. $4.80. Before that, it was $3.80, $2.79, $10. They paid $10 in 2022. So you see 15.4%. Okay, I'm 15.5, which is pretty close. So this stock went up 35% in the past year. If you put $10,000 into this company a year ago, you'd have $15,000 today. A 50% return. So are you going to get the same return next year? That's the question. And they pay annual dividends, so you have to wait. And we just passed April, so you have to wait almost a full year to see if you get another dividend. I want to say Keenan is a holding company, was invested in Zim. Keenan, that could be. They have really good coverage ratio with their net income. So this is kind of 50-50 according to the model. Keenan Holdings. Well, Zim is Israeli, so you're probably right. The holding includes investments in Zim. So it's really Zim. That's how they pay such a high dividend, because they own stock in Zim. Just like Berkshire owns stock in Apple, Coca-Cola, they own stock in Zim. So that's why they're the company's founded in 2014. Okay, it's a bit, a little risky. Pfizer, you're probably much safer putting your money in Pfizer than Keenan Holdings. 24, 21, 37. So let's see, what was last year? Pfizer was, it just keeps going down. Like, you can't catch a break if you're Pfizer. If you hold Pfizer, you just can't. 9.8 billion. That's their free cash flow, 9.8 billion, which is down a lot. It was over 30 billion. It was over 30 billion from COVID. They made a lot of money in 2021 and also in 2022 from the COVID vaccines. And those, I think it was Paxlovid, but the money they made on that went down like 90%. And other companies got into like weight loss drugs. They that was their kind of like, they were relying on the COVID vaccines, and it just it didn't hold up revenue, and they didn't really come up with anything new. So the stock just keeps coming down. But it's not like they have nothing as a company. They still have a good amount of drugs, and they have a pipeline. A 7.1% yield. They're also 7.1%. But the thing is, it cost them 9.7 billion to pay the dividends to the shareholders, and that's their free cash flow is almost exactly that number. So they could just cover their dividends with their free cash flow. Net income, though, it's only 600 million, so lots of write-downs. I'm sure you have already discussed this, but have you sold your Berkshire shares now? Buffett is stepping now? No, I didn't sell. He's still going to be involved in the company. He's just not going to be the CEO anymore. I think at the end of the year, right? He said the end of the year, so he still has this year. But he's still going to be pretty involved. But it's not like Berkshire. I own a lot of stocks because I own what they own. So they own stocks in so many companies. So it's like paying somebody to manage your money. Like, that's kind of what I'm doing by owning Berkshire stock. But what do you guys think? You think I should sell? It's did they release their the annual report? I don't remember seeing it, but annual reports. I guess the annual report would only come at the end of the year. So I guess they didn't. So they yeah, they did go down a little bit. Their revenue was pretty much flat from last year, but their net income went down. It was 13 billion this year. It's 4.6 billion. Don't sell BRK. It's better than owning Bitcoin. I think so. Although I could buy 8 Bitcoins with my one share of BRK. But even if I mean, I think Bitcoin is a pretty good investment. But it's kind of like just because I think owning a Ferrari is cool and nice doesn't mean I'm going to buy one. There's a lot of things I think are worth it or not worth it. But yeah. I don't really get that much. It doesn't excite me owning a really expensive car. I know some people it does. And when I first graduated college and got my first full-time job, I think a lot of people do this. They get a nice car. I got a BMW. But it didn't do much. I mean, it was a smooth ride, but I don't really get much out of it anymore. Like owning nice stuff. What I really like is being debt free and having a lot of savings. That excites me a lot. You can put the annual report in ChatGPT and tell it to analyze or give you certain information. But yeah, what other stocks are people looking at? Like what's stock market tomorrow? Anything in particular? Reddit. Didn't Reddit release earnings? Let's see. Dow futures fall after longest winning streak in 20 years. Did it? Remember tariffs? It wasn't even a month ago. People were saying, it's going to be worse than the Great Depression, and the market was down a lot. Like it had like 2 of the biggest red days ever, and now it's back. It's higher than ever. What else beat earnings in the last 2 days? So it looks like the pre-market trading looks like the market will likely go down on Monday, tomorrow, based on pre-market. Crude is below $60. Stocks to buy or sell. Stock market news analysis. Is there anything more recent? I don't want 2 days ago. I guess they don't have many articles on a Sunday. Right, Robinhood, right? That was Robinhood earnings. They were up 4% on Friday. Let's see. How's stock been doing? I remember when it IPO'd, there was this huge rush to buy the stock, and that was its peak. Literally, like within a week of IPO, it peaked at 57, and then it went down about 85%. But it was from March 2022. So 2 years of 2 years of a bear market, pretty much. Well, the bear market happened and then it just sat in the cellar for 2 straight years. So even if you bought it like here or here, like in end of 2022, beginning of 2023, you would have had to wait at least a year to start seeing some movement. So when you look at a chart, it seems easy, but when you're living it day in, day out, it would be hard to just sit and hold this. It did it break its all-time high? So it did get to 65 in the beginning of this year. So it did break its all-time high. Because like I said, things tend to regress towards the mean. So this was really getting beat up. So it was bound to recover, and it did. And it took a long time though. Even if you bought in February 2024, which is like the start, from February 2024, you would have had to wait a year just to get back to its all-time high. So 65 was, there's these resistance levels. So once it hits like a certain number, then there's a pullback. Or if the resistance is on the bottom, then the stock goes up. So it looks like resistance levels were in the mid 30s a couple of times. So that seems to be a good buying point. If it gets back down to the mid 30s, you should probably buy into it. Oh, how did Lumen do? Yeah. Oh, it went up a little bit, right? It's still way down. I thought it was going to continue running up, Lumen. That was a bad call on my part. I mean, Lumen's been around a long time, like I think like 100 years. So it went from like way back in 1997 dollars, and then it ran up to the 40s. And little like 20 years, it didn't break through the 40s. And then they've been really shedding customers, losing a lot of market share. And people thought it was going to go bankrupt. So it did get down to below $1. Yeah, Google is probably, seems like a good investment. I should have got it at $1. It's so easy to say after the fact. But once it hit 10, I was pretty confident it would run up to its all-time high, but it didn't. 10 was the resistance, and then it came down from there. But there'll be another run up. It just takes forever. So this was November 2024 when it hit. Okay, I'm back. It cuts out. More and more people use the platform. It will be a good stock 4 or 5 years. Robinhood. Yeah, I think so. I'm not sure about Robinhood. I think. Let's see. Simply Wall Street's at $20. Let's see. Analysts. Analysts are probably at. Analysts say it's undervalued. They're at 59. Victor likes Robinhood. Yeah, I mean, I could see it doing well. I could see it doing well. It's not. I generally don't invest in brokerage companies, like stockbroker websites. But if they continue, actually, maybe he has a good point, because with crypto, and they're really heavily in crypto, people will start gravitating more towards a place like this than the older trading houses like E-Trade and the ones that have been around for like forever. They don't pay a dividend, right? 2% buyback. Yeah, their revenue has gone up a lot. I remember it was a big run up, and then they started to regress in 2021. They got up to 1.8 billion, then they came down, but now they're higher than ever, 3.3 billion. So monthly metrics dashboard. So it's really user based. That's what you got to really look at with these companies, because sometimes revenue can be a little hard to look at for insurance or finance companies. So customers is really the focus, I think, and they have been increasing, steadily increasing. I don't think it's that it looks like it's pretty limited. I think they were growing their customer base much more in prior years. It seems like the growth is subsided from 23.6 million customers to 25.8. They tend to have smaller customers, like in terms of their portfolios, as opposed to someone who's on like Morgan Stanley as a trader. So the assets on a platform, they did come down actually from January to February. That's interesting. Deposits are up a lot. 7.6 billion of deposits in March. Volume is down though. That's not what you want to see. That's the volume of the trades, 126 billion. Options is kind of flat. Robinhood does have the hype right now. They do, it's kind of like a meme stock. They do have a lot of interest. But crypto, look at crypto volumes. Look how much it's come down. So that's a little concerning. Maybe because the price of Bitcoin is lower, so that coincides with the price of Bitcoin. But this is down like 60-70%, 35 billion, 11 billion. Bitcoin is not down. Bitcoin is actually back to its isn't it back up to like 90,000? 94,000. So it's almost back to 100,000. So it's not even down much at all. Maybe 10%. No, but volume, part of how they make money is on the fees. So the more volume, the more money these transactions are, the more fees they make. Actually, I'm right back. Bathroom break. They should be coming soon. Okay, can someone look at CDLR? Your Robinhood app. It's probably too many people looking at it. It's crashing. Coda. Futu has a way better brokerage app than Robinhood. Coda. Coda. Is that the metals company? That mining? I don't know. I can't even find it. Coda. I don't even see anything with that ticker. Is that, I don't know. I can't even find the ticker. CDLR. This is the company, CDLR? Has been in charge of transportation and installation of 139 wind turbines. So offshore wind. You guys pick some real doozies. It's a Swedish company. Norwegian, Norway. So pretty new, 2020. It IPO'd in 2020. It peaked in 2024, almost 80 Norwegian krona. And then it fell about 35% from that peak. Simply Wall Street thinks it's worth $518 a share. That sounds a little too high. Analysts are at 85. But they lose a lot of money. They still have negative free cash flow. So let's look at revenue. So revenue, it popped up a lot recently, 248 million. So it was really low for a while. It started growing in 2021 and shot up big time. Yeah, this is a tough one to the negative 9% buyback yield. So they're diluting shareholders 9%. But that's what you have to do if you're losing so much money. That's a good sign. Employee count, it went from 30, 40, 50. Now it's 659. So that gives you more comfort that they're busy. They have stuff going on where they have to add 600 more employees. But you can't really do a DCF with a company like this because it would just come out negative. you just have to the interesting one to look at. Futu has a way better brokerage. Virtu. We looked at Virtu on Victor's. That's a broker, right? The Virtu Financial. It's up 83% the past year. But it is a bit rocky. It's lots of, I mean, look, it's all over the place. Like it comes up to 36, then back down. So 2018. So from 2018 to 2022, 4 years, you would have had to wait for it to get back to its previous high. And then 2.5 years from this high to this high. So if you're looking for a really nice return, it doesn't look like it's going to happen with the stock. At least not now. Maybe if you caught it at one of the dips and waited a couple of years. But right now it's kind of you kind of missed the boat. So it seems. Doesn't mean it can't go higher, but they do pay a big dividend, right? Okay, 2.3%. Yeah, the dividend's all over the place because the stock just moves around so much. Virtu. Definitely interesting stock. Yeah, they're a market maker. I remember that. Talking about this. What company are you looking at? Virtu. Virtu Financial. They're a market maker. They I think they're a broker dealer as well. Yeah, in 2018 they acquired a brokerage, investment technology group. So they also operate as a broker dealer. Huh. So I'm not really sure. Yeah, so they IPO'd in 2014. Virtu operates on kind of a shady company, but looks ready for a dip. It does. But when you do buy the dip, though, you have to wait like a year or two. Like even if you timed it perfectly, you still have to wait 2+ years to get back to its new high. So it's not like at least when people trade, like when they buy like good companies like Nvidia, stuff like that, they want to see movement. They don't want to wait years and years because it feels like you're just wasting money when the stock doesn't do anything. Why did LC drop on earnings? Is that Lending Club? %6. Yeah, look, they really I think they did a reverse stock split. They did a reverse stock split in 2019. I guess they were getting close to getting delisted. It's a brutal stock to own, Lending Club. This says it went up 4.5% on Friday. I thought it went down. Why did Lending Club drop in earnings? It looks like it went up. Lending Club had a fine quarter. This is old. Earnings flash. Lending Club post revenue. It looks like it went up on earnings, actually. I'm trying to find. All these articles are old, so I can't really find anything talking about the current earnings. Actually, this website, they may have first quarter. Okay, first quarter earnings. Revenue exceeds expectations. EPS falls behind. So EPS of 10 cents, which is down from 11 cents last year. Revenue is up 13%. Net income is down. Margins are down. So not the best earnings. Revenue forecast to grow. On April 29th. Okay, so April 29th, it was 11, and the following day it was 9.77. So it did come down. Okay, here we go. I guess it was just bad earnings. Just not. Yeah, because they only beat revenue, but they missed on earnings. Their margins came down, so that looks like and the revenue forecast is 2.2%. Revenue is forecast to grow 2.2% on average during the next 3 years, compared to a 11% forecast. So their revenue is projected to grow a lot less than their peers. So yeah, so it looks like they missed on earnings. The forecast isn't so great. The only thing they beat on was revenue, but everything else they kind of whiffed on. Yeah, CDLR. It's hard to get a lot of info on these types of companies. Like, there's not as many news articles. So CDLR, the last news report is April 15th, like more than 2 weeks ago. So this is the reason why we think CDLR CEO might be underpaid. Hey, 1 second. Yeah. This is how like Buffett made money. He would look at companies that other people weren't looking at. You're more likely to find a good deal with these companies. It's just hard to kind of sift through and understand it. CDLR to hold its general meeting. CEO gets 600,000 euros, but his total compensation is 35% below industry average. Let's see, full year earnings. So for 2024, everything's up. EPS up, revenue up 129%, net income up 466%, and margins up 11%. So it looks like a good opportunity, CDLR for I wish it was so easy as Buffett talks about, like the way he explains it. It sounds so easy, but what about shareholder? But it looks like it's a better time to buy into CDLR because it ran up so much to 77. So it's finally pulling back a bit. And it looks like the resistance level was close to 50. Because once it hit 50, it kind of started moving up. Because that's how any stock is. Once it gets to a certain number, if it goes down and down and down, people have buy orders set. Maybe not this company as much, but every stock, there's, how much is a stock? So you see, it was 75 kronas, and then it got down to 50. So it's 75. So 75. So there might be, 100 people who have buy orders. Once it hits 50, they buy like $1,000 stock. And like big companies have like, 1 million people buy orders at certain levels. Have the shareholder has return on capital employed? Well, apparently that article did say the shareholders were doing well. I guess that was part of the article. that the CEO is underpaid and the shareholder return over the past 3 years was 46%. So it's, I mean, you don't see many articles about underpaid CEOs. It's not like a catchy headline, but I don't know. Maybe the CEO asked someone to write that article. It's driven by algorithm and HFTs. Oh, high frequency traders. Yeah. I mean, that makes sense. But it's still grounded in fundamentals. So even if stock goes way up or way down, it still has to. This fundamentals still have to align, because there's a lot of people looking at every stock, and once something gets, too overpriced or underpriced. But it was like that with what was that company? GameStop, right? A lot of people were shorting it, like those big hedge funds were shorting it. But then, people on Reddit and other communities started buying it and just ignoring the fundamentals. They just bought it just to screw the hedge funds. Are you still talking about CDLR is trading almost 22? No, I wasn't talking about CDLR. It's trading at 56. CDLR. Are you talking about in the US maybe? Yeah, in the US it's trading at 22. That's true. So it seems like the resistance was 18. Once it hit 18, it kind of jumped from there. But wouldn't that be a nightmare if, say you wanted to buy Nvidia, right? And you had an order to when it hits a certain dollar amount, you would buy it, right? And let's just say this happened with Nvidia. Say Nvidia's trading at like 250 a share, and you're like, okay, once it hits 200, I'm gonna buy. That's when I buy all my shares at Nvidia. And it gets from 250, it gets down to like 210. And then it goes from 210 to 1,000. Like, it's just be a nightmare. Like, you would have been like, I should have just bought it at 250 and not try to time the market. That's why I don't do things like that. I don't like say once it hits a certain amount, I'll buy it. If I like it, I buy it. If I don't like it, I don't buy it. But okay, getting tired. So yeah, so thanks for talking about the market. It's good to just get a refresher before tomorrow's trades. And yeah, I'll try to stream during the week, and we can talk more about this stuff. Hope you guys make a lot of money this week, and try to leave some comments. Let me know how it's going. Okay, I'll see you.